Hey, good evening, everybody. I want to start this video to mention a tribute to Lloyd Cox. Uh, he has Trade with Joe Trading Group, and last Sunday he passed away on us, and it was a really heartbreaking. It's had me off all week long because of it, and I'm still just not quite all the way right. It just turned out it was 6 months to the day that he passed away from when my brother died from COVID. So that really messed with my brain a little bit last week. I had a good week last week, but so I did want to have a tribute out to him, and we're all going to miss him, and it's going to be a little bit heartbreaking and stuff, guys. So we're going to move on here real quick, and some things I'm looking at here. So the Andrews Pitchfork I've got set up here, the green lines coming down here. This is based off the all-time high. And so we are still in a confirmed downtrend based off the all-time highs with our Andrews Pitchfork. What we're trying to do here, guys, you draw a line right here. This is an inverted head and shoulders pattern potentially here, setting up here. Here for our S&Ps. We are above our exponential 150 moving average. We've been fighting that for a while here. So we are still solidly still in a confirmed downtrend scenario. And if you go and look right now, let me erase that line I just put on there. Go here on a 5 minute real quick here. And as you can see this morning or this evening, we did have a gap down open here on the ES futures. So they initially did not want to even hold Friday's closing price here on the ES futures. So just keep that in mind going forward here. I'm still thinking what they're trying to do. What they can do is just chop us around. And then at some point this week, I think we're going to tag, uh, uh, potentially tag this. Maybe next week. We'll see what happens here. So some things happening this week. We do have CPI coming out Wednesday, so that's a biggie. And then we also had the Google stock split hitting Friday. So we do have two big events happening this week. CPI, the numbers are lagging. That's the numbers from data that's already occurred. So I don't know if we're actually going to see a decrease in our CPI yet. We're starting to see initial signs that we've peaked out on inflation, and we're probably not going to get those better numbers until the next CPI report. So remember that we're going into this number. This number is probably going to be pretty hot. So just something to definitely think about going forward here. Okay. So, our market maker move this week is it's roughly 4,000, roughly 3,800. Those are the two different areas we possibly could go to, both sides. And I am really stalking this daily 50. This is 39.66 for a potential upside target this week. That's the bullish case, of course. So just keep that in mind, thinking that we're going to be coming into this Andrews Pitchfork. Okay. And here's a quick view on your ESs here. We're kind of where by the end of the week, right around 4,000 here as a potential what they're currently expecting. Remember, guys, we've been doing two standard deviations week after week after week. In that scenario, that would put us 100 points above that. That put us up to the 4,100. Okay. 41, if you were to happen to do, a two standard deviation move. So definitely, or a little bit past 4,100, I think. So I don't think that's going to happen, but you never know. But like I said, this is a potential inverted head and shoulders. We were to get a bullish breakout of that downward inverse pitchfork, we could very easily be coming up to the top of this. We found resistance here below 4,200 last week on the bullish side. Um, Bottom line is we still got the change trend. The trend is down. Okay, look at our NQs this week. We know we got Google going on. We know the past few weeks, Nasdaq has been leading the markets. Okay, so if we were to have a really bullish case, in theory, this week, tech should continue the drive higher. Okay, So we do have an inverted head and shoulders pattern going on here. It is actually more compressed than what we have on the S&P. So do keep that in mind also, that this thing earlier on seemed to be bottoming out versus the other indices. The other indices caught up. The Dow, everything else came down as the Nasdaq's relative weakness was getting relative strength relative to the other indices. Okay, so uh, some things I'm looking at right here, right now. If we were to do a 2 standard deviation move, which we seem to be doing every week, okay, that potentially could put us back up here at the 12,800 going into this week. So we could have actually literally, if we do what we've been doing, have a 2 standard deviation move again here on the NASDAQ, and that would actually complete this potential inverted head and shoulders. Be back up here at the top of this neckline. So just definitely keep that one in the back of your mind going forward here. We are still fighting this exponential 150. Okay, we cannot seem to get above that. I would think an opening print above that would definitely be a signal for me to start looking to the long side. Okay, so that's 12,229, something like that. Definitely keep that one in watch going forward here. Okay, here's the way the market maker moves are kind of setting up right here. 11,800, okay, to the downside, and then potentially all the way up to the 12,000. 12,400 is what they're currently pricing in, but 12,800 with all the Google stuff going on, like I said, that would get you right up here in the top of this potentially if that were to happen, a 2 standard deviation move. Now be aware, since we came up so much the last few days of last week, a 2 standard deviation move to the downside, that's going to put you back down to these prior lows right down here. So I do not want to discount the 11,400 is not in the cards this week. I mean, I absolutely do not want to discount that because, the Andrews pitchforks have not been violated yet. And in my opinion, this is the pattern we got playing out here on the NASDAQ. So even though we have crossed the midline right here, in my opinion, this is still quite precarious. Okay, and another way of looking at this, 1 second here. So another way of looking at it, that's if you put a channel right off your midline on your Andrews pitchfork, you notice we've looked at above that once before, and initially that morning we had an opening print above it and it got rejected. We had an opening print right here, right now on the NASDAQ, and initially here we are getting rejected. So let's see how this plays out for the opening session. So we have not broken our downtrend at all. But tomorrow could be the day. So just be aware of that scenario. We're right there trying to fight to change trend. I just want to, this could lead to a very significant short squeeze. So be aware of that scenario. Okay, the Russell is actually outside of its Andrews pitchfork again for the second time. Okay, and it's a similar situation as the as the Nasdaq right here. We're coming right into this secondary channel, but this is off the outside. But on the Nasdaq, you are coming off the midline. On the Russell, you're coming off the outside. Okay, so this here is actually technically a possible trend change. Okay, this is the one that you really got to look for here. Let me double check that Nasdaq. So some quick takeaways that I've got. Apple's doing a very good job leading tech here. So heads up on that. So we are confirming a breakout of this head, the head, shoulders. It should, in theory, be the first one to come up and test the neckline. So we are right there. The neckline is actually lining up with this week's expected move. So like on the indices, we're not there yet. Okay. But on Apple, it's showing relative strength versus the NASDAQ. So it is given the potential of leading to be the first one to be coming up here and testing the potential inverted head and shoulders neckline. So be aware of that scenario going into this week. Simple moving average here. Just did I update that? Wait a second. Let me double check it. Some things I'm looking at here on Apple also. You see this critical resistance? That's this line right here on Apple. And I'm going to go out in time and show you guys something on Apple. You see this breakdown right here? So I have that marked as critical resistance. That is also the neckline high. That's a scenario that I am strongly thinking is going to play out this week, that we are going to come up here and tag this line at some point this week. So I'm on a weekly time frame there. That would put us at the 152.60 potentially here for Apple this week. Next one I'm looking at here is Nvidia, which has really been lagging tech. So this is the worst of the tech area. So if we were to do a trend change and start breaking out to the upside, this is an area that I think could be really hot this week. So definitely keep that in mind, because a lot of shorts in the semiconductors. If we start showing signs that we've finally changed trend, which we're right there in my opinion, then this thing here could very easily be coming up to the top of this. These are market maker expected moves. I see the potential of a 2 standard deviation move here in semis this week. So definitely keep this one on watch. That put us at 180, 180.50 area, possibly here on Nvidia, if something like right. And look at this, we're only 158 right now. So remember, I am calling right now the potential for 180 this week here on Nvidia. So Amazon's another one. You know, we had our stock split and everything already with Amazon. We do have Prime Day. You know, Prime Day is underway right now. You know, right now here also, typically you do get some bids and stuff during the Prime Day season and stuff. I could, you know, it's got a lot to that needs to be prepared. You got to get to the 125.26 for the potential for a reversal to the upside. To me, uh, you know, this could be just bear flagging sideways into the midline for another move lower. I don't know yet, but I'm not. I really can't give you a really good feeling here on this one here. So basically, you see this right here. We broke below that right there, the 122 area. Really critical area, the 122 area, if we can get back up. So if we could get back up into that 122 and hold into the end of the week, very constructive here for Amazon. So right now, Tesla's looking very constructive for a bullish move higher here. We know for a fact that this is a possible, you got to get back above the 780 area, okay, because that was a breakdown area before, okay. So just keep this one on watch here. But here on our Andrews Pitchfork, we've broken out of this trend on this candle and this candle. So all these candles, we are going into the first of the week with a very strong pattern that does not have any reference for resistance. Okay, so definitely keep this in watch. This here is in all likelihood to be a very strong pattern if the markets were to hold. So this is actually one of the stronger charts that I am seeing here. Microsoft's another one showing a lot of relative strength here. So basically what I've got going on my chart pattern here, we don't have any type of historical trend resistance, okay? So, you know, we have a price level resistance. So basically we know that we have broken this support right here. This support right about here. So this week's market maker move high, that is the support area that we broke. In all likelihood, given the pattern, we're going to go and test that this week. The 175 area, the 275 area. Really, really nice pattern. The moment we start breaking above, you know, last week's highs, you know, you want to go, you know, that's a long in my opinion. So definitely keep that one on watch as well. Okay, Google. Okay, I put in Andrew's Pitchfork on this. Typically, what I would do is anchor off this wick candle here, but the wick is so long. I only anchor off of wicks if the main candle was 90%. You know, if this is like the wick is 10% above the body, then I will anchor off that. So I went back here and I anchored off this. So what we got going on here, similar situation. We're going into the split this week. We don't have any reference above the midline here. It's a very bullish weekly candle, extremely bullish weekly candle here on Google. So really looking good going into this week. That's my conglomerate chart. And then I was going to put Boeing on here too. Okay. And then what we got going on Boeing down here. So basically, you see these channels that I've got drawn in here. So we found resistance in this channel coming into here. Okay. Once we broke into this channel last time, it was a rocket ship. You see that, guys? Rocket ship into this channel. Okay. Once we broke into this channel, it was a rocket ship. Okay. We're right here. We're right here right now on a potential break into this channel again. So be aware of that scenario. I'm not saying we're going to come up this high, but we could very easily eclipse this entire channel this week here on Boeing, putting us potentially up here into the 190s this week. So uh, um, be aware of that scenario. That does seem a little far fetched, but my point is, I don't know if we can do it all this week. We'll probably need some news for it, but the midline right here is possible. That'd be 168. Okay. So, that's probably relatively a two standard deviation move or something like that. Or, the 155, something like that, 155, 160 area, getting us right near this midline if we were to break to the upside. Just definitely something I'm keeping on the watch. I'm keeping the bullish case alive and well here, because of what the kind of news we got coming out this week. Remember, the Nord Stream pipeline is completely shut down for at least 10 days maintenance. So that means Germany and Europe are not getting any natural gas from Russia. Okay, so be aware of that scenario. That is the bearish case. The trends are right at their limit. This could be the point to which we should be strong bears. I mean, for the next big leg lower. I mean, I don't know for sure. I'm going to trade what the market tells me tomorrow, Monday morning. I'm just giving the bull case in case that does start to play out here. Okay. Guys, if you like the video, please like me. I need as many likes as I can so I can get faster uploads on these things. And you can retweet me on Gumby9662C on Twitter. Please do that if you get a chance. And please leave comments below. If you're seeing stuff that I'm not seeing, I really appreciate that feedback. Let's see, is there anything else here on the futures? Let me pull up the futures real quick here before I sign off. If I can find it. And the futures right now, yeah, we're still down here on our futures early on this morning. So it's not the end of the world though. Okay, so we're down 8 points on the E-minis. I mean, it's not, yeah, the NQs look like, yeah, NQs, yeah, see, look at that, guys. That is really insignificant whatsoever, okay? And so definitely keep that on watch. And on your charting, another way you guys may want to think about doing things. One second here, I'll show you. Okay, one last little tidbit might help you guys out on your charting if you're doing it. Uh, what I've been doing last Friday, this was July 1st. Okay, I've just been putting a channel, basically off the closing price here, the closing price high, and just draw yourself a channel and do this on all the indices here, and anchor yourself a channel, and this gives you an idea how trend is playing out uh, on the monthly. Okay, and you know once you start once you start accepting prices below the midline, you know you know, on your monthly channel, then you know that, hey, maybe I should start leaning more and more to the bearish side. Okay. Obviously, so far this month, it has been a very strong bullish action here going on in this market. So just a little tidbit, just do that for all your indices. NASDAQ's even doing better. Okay. The rest is kind of, I can show you that real quick. And then you see, since last Friday, you come up here, those closing print highs and the cash session highs. That's how I anchor it. Okay. And you just go down here and you just go down, you get an idea of what's going on here on the price action. Okay, these have been much more violent moves. You see how the violent moves are here on the IWM. It doesn't have that conviction that you have on the other indices. It gives you just a little better tell. It's just like we're going, if we have any type of a sell off into, we could be right here into the midline tomorrow morning. So be aware of that scenario. This is the one that is potentially giving you the most worry going into this week. Oh yeah, also, it's bank earnings week, guys. So be aware, a lot of banks, we're kicking off earnings season. I almost forgot to mention that. I'm sorry. Uh, my mind's just not completely there. Okay, guys. So, and what we're really not seeing that. What I like to see on Fridays is a big buildup in the banks. People trying to position themselves ahead of the earnings. I really wasn't seeing that Friday, so I definitely want to keep that in the back of your minds. The confidence that the banks are going to have a really good earnings season. It's not wasn't there Friday or into last week, so I just keep that in the back of your mind. Okay.